So today our topic is supporting your small business clients to benefit from tax options. And we've got in the room two experts in the field in the form of Kantha Naicker, who's the owner of Evolve Accounting. So welcome to the webinar, the CPD webinar here today, Kantha. Looking forward to learn from you about how the whole tax system for small businesses fit together. It may be complicated if one looks at it first, but I think, you know, sort of having chatted with you before about this, it's not so complicated when you explain it, at least. And then we also have Mahomed Kanda, who's the tax advisor at SAIPA, the professional body for professional accountants, in the room. Good morning, Mahomed. Welcome to the webinar as well. You are the real expert, so we're looking forward to some detail and some interesting things. I know I've seen the slides that you will share. So guys, keep your pens ready, because there's some really useful information coming today in the form of the CPD webinar. But let's jump into it. So if we can get Kantha, if we can get Kantha's slides up, then we can ask her to introduce us to this, the whole system of taxation for small businesses, how it applies to small businesses. That will be the first segment, and then we'll bring Mahomed in on specific issues to explain a bit more, and then there will be time for Q&A as well. So just a reminder, click that Q&A button if you have a question. If during the presentation you can do that, so too. And if you do want to participate in the text chat, you can do so while the discussion is advancing too. So over to you, Kantha. So this whole SME tax system that seems so complicated if you look at it first, how can we understand it better?
So thank you so much for the invite, Christoph, and to IBASA to spend some time with you guys this morning. Tax at its best is complicated, but it can be simplified if we just understand where we're coming from and what we're wanting to achieve. And in my slides, and I don't know whether my slides can start now.
Yeah, they can. So you could just ask Carl to forward for you at the right moment.
Perfect. Thanks so much. So I've broken it into three broad categories. I want to talk about SMEs per se, the types of business entities we have, and then registrations and taxes, because we need to understand when we start a business, or if we're in the throes of business, what our responsibilities are. SMEs obviously make up the bulk amount of the economy. The hardest part with SMEs is that, and we've got lots of advisors who are sitting on this chat, SMEs want to do everything on their own. And it's up to you to recognize when you need to step in and say, look, you've got to make widgets and I've got to do what I do best. And I've got to direct you in the right direction. If I could go to my next slide, I'll talk to you about what SMEs mean in terms of the Tax Act. So we talk about a small business corporation. The South African Income Tax Act talks about a small business corporation. And I'm going to concentrate on this definition only because we've got varying levels of definitions. We've got, on the BE side, we'll talk about levels with EMEs and QSEs, etc. We will talk about the number of employees if we have a look at different acts and the size of business, etc. But for the purposes of today's discussion, I want to concentrate on what is a small business corporation per SARS, or per the Income Tax Act. It is a tax turnover threshold up to February 2020 of 20 million. So it means that your business is making 20 million turnover in that year, and that your company must meet all the following requirements: that all shareholders and or members are natural persons, they must not hold shares in any other private company, and no members' interest in any other closed corporation, broadly. For people who are advising small businesses, you will need to identify this quite early on in your conversation, because a lot of people want to jump into this regime and then fall out of it because within that tax year, obviously go over the threshold. So we're going to, I'm going to leave out the other definitions of what SMEs are, and I want you to just keep this in mind as we go further and we chat. This is the primary sort of definition we're going to work around. I want to go to the next slide, and I want to talk about the types of business. And here we've got to distinguish between the owner and the business. And for the longest time in South Africa, we've had sole proprietorship. Anywhere across the world, we've had sole proprietorship. So you are the business, and the business is you. So there's no legal entity. You are the legal entity, right? It's Kantha Naicker, and she runs an accounting practice, and it's her and herself. She's identified by her identity number. Then the next type of business entity, and that can fall under small business rules broadly. Then from a partnership perspective, you'll have one or two more people who sit within a partnership agreement. They will have a legal document that talks about who they are. There are three people here. It's Mahomed, Kanda, and Carol. We each have identity documents to identify who we are, and we have a legal document that sets out how the business is run, etc. And that partnership then is not registered for any income tax, where as individuals you are. So that's one distinction. The third type of entity, which we are very familiar with in this country, is a closed corporation. We've got remnants of the Closed Corporation Act coming through because we've had closed corporations since the 70s or so. That act changed in 2011. And so since 2011, we have not had new closed corporations. So whatever we see in the marketplace now, we encounter in the marketplace are CCs that have been pre-existing. There have been no new CCs that have been set up or will be set up. The CCs are anywhere between 1 to 10 members. There are legal entities that can be members of closed corporations, but today's discussion is not about that. It's just about showing us the different types of entities and then obviously the registrations that affect each one of them. Then the more common one, and which post-2011 we've had to all set up, is a private corporation, a PTY Limited. It comes with its own challenges on the Governance and Companies Act side, but largely from a registration perspective would follow the same rules and same process. And least but not last is the limited liability company. Not for our purposes, we're talking and concentrating on SMMEs for now. So I've just left it there so that you know that there's another type of entity. So in talking about types of businesses, we need to constantly look at who is the owner or owners, shareholders / members, and who is the business. Legal entities have their own persona, have their own legal persona. So if you, and if you're business owners that are on this call as well as advisors, you've got a registration number from CIPC that talks about when you were registered and what type of entity you are. If you end in a /23 on your reg number, you're a CC. If you end in a /07, you are a company. So one of the first things to set up an entity legally is to go via CIPC, Companies Intellectual Property Commissioner, and you will be given a registration number. If you are a sole proprietor, you do not have a registration number. You have an identity number because it's yourself. It's Kantha Naicker, the person who has an ID number, and that's your reference. And I'll come back to as to why that's important just now. So that's CIPC is the starting point of setting up the legal entity. Then come all the registrations and taxes. So as an individual, you have to register for tax if you earn income in this country. There are certain thresholds that you will fall under. If you're running a business, you've got to present a very simple income statement / balance sheet to show what you've earned and what you've done for that year in terms of business and the type of business that you've run. So you will have an income tax number as an individual. You will also have an income tax number as a business entity. So one of the first things, and CIPC used to do this quite religiously previously, I'm not sure if that's the case now, they will give you an income tax number when you register an entity. You register PTY Limited. If you do not get an income tax number, you will need to go to SARS to do that registration, okay? And I've put under there the SBC as well as turnover tax. Now, SBC I touched on earlier. It's the small business corporation regime. You're taxed on a sliding scale, and there's certain requirements which I touched on earlier. Turnover tax is a different, not different. It's one of the avenues in which you can be taxed differently. It's based on your turnover. It's considered to be a simplified tax system for small businesses. In my humble opinion, I don't think it's that simplified. I think it's sufficiently admin driven and onerous from a business owner perspective. But however, it exists, and it's an avenue that small businesses can use. The threshold there is the 1 million rand turnover a year, and you fall out of the turnover tax regime as soon as you hit the 1 million rand threshold. It takes the place of VAT, so you're not a VAT vendor in that 1 million band. And obviously, once you go over 1 million, and I'll cover that under VAT, you have to be registered for VAT. So in a nutshell, that's income tax. Everybody will have to have an income tax number, whether you're an individual or you are a legal entity. Then PAYE SDL. PAYE refers to the tax that is levied on employees by an employer. The employer, the company, will deduct PAYE from the salaries of employees and pay that over to SARS on a monthly basis. And that PAYE is paid over within 7 days of the end of the month end, following that month in which that salary was paid. And if the 7th falls on a weekend or a non-business day, a public holiday, it's got to be paid the last business day before that. With SARS, when you do this registration, and it can be done online via the SARS e-filing portal, you would register for PAYE and UIF, so SARS can collect that on behalf of the UIF commissioner. And I'll talk about the UIF registration just now, as you see my next bullet point there. SDL, Skills Development Levy, is based on salaries. So you have staff, you pay them, your payroll for the year exceeds 500,000, you have to be registered for SDL. It is at 1% of the value of the payroll, and there are a few other specifics that need to be noted. But I think as an advisor or as a business owner, you need to note that as soon as your payroll value exceeds 500,000, you have to be registered. There's no two-twos about it. So PAYE, SDL, and to a certain extent UIF go together because SARS collects those taxes. It is the company's responsibility to do the deductions and pay that over to SARS timelessly, or else there are penalties and interest in all of that. UIF, why did I put it as a separate topic? UIF, the UIF commissioner and the Department of Labor takes care of UIF. Now, if you're not a business that is eligible to deduct PAYE, you've got workers who earn under the thresholds, the tax thresholds, you will only deduct 1% of UIF. You can do 1% for the employer, 1% for the employee, and that can be paid directly through to the UIF commissioner. However, we suggest strongly that everything gets done via the SARS system because it's one way of your accountant tracking the amounts that are being paid and proving that they've been paid, because you're filling out a form once a month and that gets submitted and paid. Workmen's compensation, quite a tricky registration because at the best of times, the Department of Labor systems may not be working. However, should you employ employees, you have to register for workmen's compensation. There's no questioning whether you should or not. You must register for workmen's compensation. It can be done online when the systems are up. I believe the systems have been down a little bit in the last couple of weeks. But if you're experiencing difficulties, there is a manual process, which is quite onerous. So I would then go back to your accountant again or to your accountant community and ask how to do it, or go directly to the Department of Labor. They've been very forthcoming with information regarding their systems. VAT, the big one. Now, for small businesses, this is a bugbear. The reality is that the threshold for VAT is at 1 million rand. You must register for VAT if within a 12-month period you will exceed, a rolling 12-month period, you will exceed the 1 million rand. However, small businesses are told that they should register for VAT because big business will not do business with small business if they're not VAT registered, because the big business obviously wants the deduction from the invoices that are presented. I find it unfortunate that small businesses are pushed into the space. We like to help businesses through the process, and generally that registration can be onerous. If you do not have at least 3 months worth of trading, the invoicing and the money being received into the bank account to actually show that you're going to be within that or over that threshold. There is a voluntary registration, so you can go to SARS voluntarily and say, look, I've done a month's, or I'm about to do a month's worth of transactions, or 6 months worth of transactions. I've got a tender, I've got a contract that's signed. I will be over that, and so voluntarily I need to register now. Administratively, there's a lot of information that will have to be provided to SARS, and that's best handled by a qualified tax practitioner or your accountant. The voluntary registration gets done, or any of the registrations, in fact, for SARS can get done via the SARS e-filing portal. And from time to time, you'd have to go in and represent the representative person, the person who's representing that legal entity, will have to go in personally for certain things like bank verification details, etc. Now, one of the biggest questions we get regarding registrations and taxes is, I'm a sole practitioner, or I'm a sole trader, I'm a sole proprietor. Must I register for these things? And that really gets, you've got to really think about, what are you going to do in your business? How are you going to scale your business? And will you grow your business? And all those are open-ended questions. You don't know whether that's going to happen when you start off. You don't know how successful you're going to be. My suggestion is to make sure and ensure that all your administrative registrations, accounting work, etc., bookkeeping work is taken care of upfront as business owners. As consultants, you will obviously go back and you will advise clients accordingly. They generally don't come to you at the start. They come to you when the proverbials hit the fan, and now you've got to work through it all. And the best thing to do there is to make right straight away in terms of the registrations and ensure that they are compliant, because it is it's really hard to get back onto the bandwagon once you've fallen off, because there are penalties and interest and the like that get thrown at you from SARS. I've covered very generally what we need to do in terms of registrations, etc. There may be very pointed questions in terms of how we need to deal with this. And I'll be guided by Christoph if there have been any questions that have been raised.
Yeah, there are some questions coming already, so thank you for those that have been noting the questions. I see Mohammed is diligently starting answering them already, so by the time that we speak about them, it would be half answered. So by the way, you can follow the Q&A if you are tuning in to see what's happening there too.
Sure.
But limit your text chat comments to comments, and put the Q&A, the questions that you want us to answer in the Q&A, please. But before you go, Kantha, Karl, maybe if we can just get that slide back, the last slide with the logo on, so that people can see your contact details if they want to make contact with you.
Sure.
But my question to you would be, from what you've presented to us, what is the most common issue or challenge that small businesses bring to you in terms of the overall landscape that you've explained? So thank you very much for giving us that overall picture. Sometimes we get lost in the detail of a specific thing that we are attending to. So it's good to keep that overall picture in our minds. But what in that whole regime of tax and regulations is the one that, with your clients in Evolve, that you find that are coming up the most?
I think just the red tape that you have to jump through, and the amount of administrative things that have to be put in place at the beginning. So that certainly being one of the bugbears. Everybody wants to have a company registered and the VAT number straight away, and that's not doable. Per the Act, you've got to either do the voluntary registration and be able to prove that you've got over that 50,000 Rand turnover. And I think my colleague Mohammed will touch on that. But I think it's just the sheer number of hoops that you've got to jump through in order to get going. You know, you can get a company registered. CIPC turnaround times have done marvelously well in the last few months. I think we'll be sitting at 2 days in terms of registration of a company and getting a reg number. And on the SARS side, it sometimes varies from branch to branch. So you could do the registration, you could go in with your forms, etc., and entrepreneurs actually sit in queues to have these things done. Tax practitioners have the benefit of actually having a tax practitioner appointment to deal with these things. So we always suggest to clients, look, we can go in and do the dirty work for you. There's some times where you're going to have to come with us to that appointment, but I'd rather you come sit with me at an appointment to understand all as well. So there must be some learning on the entrepreneur side. But the biggest thing is the VAT registration at the moment, because big business is insisting that small business has a VAT number, and many of them don't need it.
We are going to delve into that topic a bit deeper just now with the help of Mahomed. So if you have any questions relating to that or any of the other issues mentioned thus far, or that you anticipate, I see Max and Clive has posted some questions there, which we'll discuss just now. But please do so, click the Q&A button and put your question there. Then we can do something that's very specific in terms of what the questions are that people in the room may have. By the way, there's a good number. We are close to 90 people in the room today. I think this topic is something that's really hitting home in terms of the requests that we get as advisors and practitioners from our clients, and we're not necessarily the experts in tax, so we don't even know ourselves how to refer people. And I think that's maybe a big step forward for myself, I know, and for many others in the room perhaps too, that if we can understand this system better, we know how to respond and refer people to the right experts for help. I suppose there's always a danger that we want to jump in if we don't know the whole thing, but that is could be disastrous too. So to know the system, but to be able to know how to refer to the right experts when it comes to the expert work. So we'll come back to you. Yes.
Can I just add one thing, and before I lose my airtime, I want to also encourage consultants, as well as there may be business owners in the room, to constantly use people who are registered with a professional body, and that professional body must be a professional body with some teeth. So they must be able to get back at that accountant or tax practitioner to say, you've done the wrong thing, you advised incorrectly. Because one of the tragedies of our economy and small businesses generally is they get taken for a ride. They use somebody who's not accredited. There isn't a professional body in the background that the owner can go to. So as advisors, I'd like to encourage you to ensure that whoever you're referring to, you ensure that that person is registered with a professional body.
Great, very valid point. And here we are, IBASA is one of them in terms of business advising, and SAIPA is another in terms of the accounting profession. And together we cover all what's needed by business owners. I'm going to be brave and try to launch another poll. So let's see if the technology this time works for us. So let's see, is that coming up for you as a Kantha while you are on screen? Can you now see the poll coming up? It's another window that pops up.
No, I haven't got the poll.
Okay.
It says poll in progress.
Sees it, you can vote, then I know you see it. But it looks like
here we go. It's come up. It's coming.
Oh, it's coming up. Okay. See, so Zoom speaks to a server in New York somewhere, I think. Or no, they've moved one to Paris. They've got one in Paris now too, I think. So we actually, me and you may sit in Johannesburg and I'm in Cape Town, but we're speaking through Paris. There we are. Carl is sharing the screen for us, but I don't see any voting. So I think that attendees can't see the poll today. So that's a pity. But
you've got your, can I just,
you can see it. You can see it and you voted. Oh, there's some people are voting. 2 people have voted, but I think it's only the panelists perhaps. So there's some, it's the first time, by the way, so I found Zoom to be quite a stable platform. And considering how we are responding to staying safe nowadays, using these kind of platforms, of course, is getting more common. So there's some, maybe one should just be patient. Maybe patience is what I don't have because there's a lot of activity now happening. So you can vote.
I think
there.
Also, if I can add, I think people need to just tap on the top of their screen if it doesn't pop up so that it says poll in progress, and so we can then get results. Okay,
maybe Zoom has changed something because previously it was popping up for people by themselves. But let's look at into that. Maybe our instructions need to be clearer so people know that. But if you can look there, so we've covering graduated tax for small corporations, micro business, turnover tax, capital gains tax, which we haven't spoken about much, value added tax, skills development, workmen's compensation, and UIF levies, and then tax on dividends versus tax on salaries, which is kind of an interesting one. And if you can just indicate there in terms of your knowledge and confidence in using that, or referring to those areas. I see there's quite a few people that have voted, but there's many more on the webinar here today that have not voted. So we'll give it in fact, let's keep that open, the poll open for a while more, even if we proceed. So, Mohammed, I would like to ask you to, maybe if you could just tilt your camera forward slightly as you switch on your camera. And then we can see your face properly, Mohammed. And then I can unmute you. So we make that easier. I can't switch on your camera for you. Let's try that again.
Can you hear me?
We can hear you well, yeah, and we can see you well too. So
Okay.
There are some common questions that we've discussed before, and in terms of addressing, and some of them have already started to come up. And thank you very much for starting to answer them in the text Q&A too. But I know you've got some slides to show us in terms of some of these that we have started to talk about. So if I can, there are a few of them that you want to cover, and then we can actually start to address the questions as they have emerged around those two. I see you've been following them. So those common questions about tax options for small businesses. And by the way, guys, Mohammed is the tax expert there at SAIPA, the professional body for accountants. And in different ways, you can maybe explain to us quickly what the tax expert at SAIPA does too, Mohammed. It sounds impressive. I know that you are doing research and staying on top of all the things relating to tax.
I think I'll tackle the question first on why should small businesses register for VAT, because that seems to be coming up in the Q&A. So maybe we can go straight to slide number 6. Yeah, because I see there's quite a few Q&A on that subject. Why should we register for VAT? Now, the thing is that big companies want to procure goods from smaller companies. And the idea is to give smaller companies a chance to grow and develop and also to contribute more to the economy. But there's always a requirement that they prefer dealing with small companies that are VAT registered. And there are reasons for that. So they don't necessarily physically force you to register for VAT, but it's always beneficial to register for VAT. And we must know what are the circumstances that encourage people to register for VAT. So let's go on to the next slide, if you don't mind. You see, you have SMEs, and when they register for VAT, you will find they have collect money on behalf of the state. So VAT is a tax that vendors collect on behalf of the state, but you only get to pay it 3 months later. So if you register as e-filing, then you could get to pay on the last business day. So most people register for VAT on a 2-month period. But when do you get to pay it? Get paid at the end of the 3rd month. So which means that you have a significant cash flow because you have that money to play with. So you can use that money as well in the intervening period before due date. So people register for VAT. And when you register for VAT, you have the benefit of claiming input tax. So when you claim your input tax, you can reduce your output tax liability. So in that case, you can reduce your VAT liability. So you do improve your cash flow. That is one way of looking at it. Now, the SMEs, if they're registered for tax, the small companies, they can claim their input back, and they can also reduce the cost. So in most companies, they pay tax at the rate of 28%, but your tax rate for VAT is 15%. So which means you get to pay less tax if you look at it that way. But that's not the main issue for us today, because the question that's coming up is that why should they register for VAT? And that's what I want to address. And that is coming up actually in our next slide, is slide number 8. Now, what is the story here? Is that if a big company wants to give a small company a chance and they want to engage to transaction, The big company is saying, but you to a small company, but you're not registered for VAT. So if you're not registered for VAT, it means a big company cannot claim the input tax. And like I explained to you in my previous slide, there are some benefits that you have when you are registered for VAT, is that you can claim the input tax. Now, if this big company is procuring goods from a smaller company, they're not able to claim the input tax because the smaller company is not registered for VAT. So if you're not registered for VAT, you're not charging your client output VAT. And the big company that's procuring from you cannot claim the input tax because they're buying from a non-vendor. So they lose out like that. So what we are saying is that they don't force you. They don't take a pistol and point it in your head and say register for VAT. They don't do that. But the idea is that if it benefits everybody to register for VAT, then a small company should register for VAT. So I want to go on to the next slide.
So Mohammed, before we step off that, sort of big corporates are fairly rigid, and they may say, oh, you must comply with this, register for VAT. However, a small business, if they don't charge the VAT, they would have been able to give a discount to the company. Their price could be more competitive in terms of their pricing. Isn't that so?
What are you saying is that because a small company is not a vendor, and when they sell their goods to a big company, because they're not leaving output tax, you are arguing that they are cheaper. Is that what you're telling me?
I'm asking whether that may be the case. Could they, because they don't add the VAT, actually come in at a cheaper price?
Let's look at it this way. I say hypothetically, if you're selling goods for 115 Rand, all right, you're selling goods for 115 Rand, and tomorrow the Minister of Finance and tells us, okay, we're now dismantling that. We're now canceling that. You as a small business, are you going to start selling your goods at 100 Rand, or you continue to sell at 115 Rand? Do you see my point?
Yeah.
You see my point? So what I think is that how often do you think that a small business who didn't register for VAT, or is a non-vendor, and let's say they're assuming 115 Rand, and now they become vendors, are they going to increase the sales? I think a lot depends on the industry and the various sector, because all sectors are not the same. If you look at the engineering sector, it won't be the same, etc. But it's very possible. Yeah, I tell everybody, never, if you want to become a specialist in tax, don't confine your specialist field to VAT only, because tomorrow morning, a Minister of Finance can say we're scrapping out VAT. He can do that. But do you think they'll stand up and say, let's scrap income tax? Are you with me? So you'd rather be a specialist in every field of tax. I'm trying to protect myself by saying that. But the point I'm trying to make is that if you step back tomorrow, I don't think everybody will drop the price.
No, sure. No, I get that point. So just to clarify, Mohammed, we know that it's if you're over R1 million, you are forced to turnover in the year. You have to register. You have to be a VAT vendor. But then there's a bracket between I think it's 200,000 and R1 million that you have the option. Is that correct?
It's 300,000. It's
300,000. So below 300,000 Rand, Unica is not allowed to register for that.
No, it's now an amount. If you have a taxable supply for an amount that exceeds 50,000.
50,000.
Yeah, up to R1 million.
Oh, okay. So if you're below 50,000 Rand, you are not allowed to register for VAT. But between 50,000 and R1 million, you've got the option.
Yes.
Okay, and just to clarify that, but let's not get
now, what I want to explain is that, you see, the dilemma is that if you are a small vendor, a small business company, the dilemma must register for VAT or not. And this is a real test. If you're a small company, you need to look at your client base. How many of them are vendors? If a majority of them are vendors, then what's going to happen? They will want to claim the input tax. So you, as a small company, have to see who your client base is, or who are your clients are. And if the majority are vendors, and you want to retain them as customers, then it's worth your while to register for VAT, because you want to maintain them.
Yeah.
But you can have another scenario where, although a minority of your clients are registered for VAT. A majority are not. But you must see how much of turnover you have with those people that are registered for VAT. So if your turnover is largely with people who are registered for VAT, then you may want to register for VAT because you want them to have the benefit of claiming their input tax.
Great. So let's move on. This is an interesting question that we often get as business advisors. If we're fortunate, if we do our job so well that our clients are starting to make big amounts of money, they know how to take it out of the business. And this is about dividends versus salary. Should they rather take dividends?
But
or
before you go there to that point, dividends versus salary, before you go to that point, the point I'm trying to make is that SMEs must see who the client bases are, who the clients are, and what they want. And that should be the test that they must employ to see or make a decision whether they must register for VAT or not. But the point I want to make is this. Once you register for VAT, then there's no special dispensation for people who register for VAT on a voluntary basis. You're going to follow all the rules that go with the VAT Act and that goes with VAT registration. Now that's where the sore point is, because that's very expensive. Because to manage a VAT function, you need a VAT specialist, for example. And to fill in the VAT 201 form, you have to have some technical knowledge. So that's where it becomes a little more expensive for a small business, because now you could employ a skillful tax practitioner to do your VAT function. So that's where I think it becomes costly. Because if you register for VAT on a voluntary basis, you have to follow all the admin rules as if you are registering on a compulsory basis. So for me, I think the SMSE, the small business, must keep that in mind. What it costs them to manage that function administratively.
Yeah.
That can be very expensive.
So let's the questions too, and our time is kind of stepping on quite fast, unfortunately, Mohammed. This thing about dividends and salaries, can you explain to us how that fits together and how the choices should be made?
I think we explained that in the earlier slide, but I can also do it verbally. But can you get to the slide? Look,
we've got the dividends and salary slide on.
Okay. When it comes to dividend and salary, it's very obvious. There's a temptation for us as taxpayers to pay more dividend and less income tax. Would you agree? Because in income tax, your rates are much higher. And with dividend, you're paying 20% tax. So everybody will have a temptation to say, I'm getting more dividend and not salary. Because that's one way of reducing my tax debt. You should pay tax at a lower rate at 20% if I belong to 45% rate for personal income tax. I understand that. But also understand something else. The revenue service is not stupid as well. I mean, they're not going to take things lightly. If you want to win a soccer match, I'm borrowing from another discipline, sport, you have to understand how your opponent thinks. And the moment you disrespect your opponent, you're going to lose a soccer match. So similarly here, the rules are very clear on what ground and how do you declare dividends. So you cannot declare dividend every month because you get paid every month a salary. Are you telling me that every month you're getting dividends? Are you with me? So there's a way in which dividends are declared. So dividends are what? It's a tax based on, it is an after profit tax. So that means the company must do its financials, it would have paid its corporate income tax, and then it's going to decide whether it want to declare dividend. So when you are a shareholder, you will receive dividend in your capacity as a shareholder. So that dividend is dividend. It's not salary, it's dividend because it's coming from your ownership of shares. But the company can only declare dividend once it has produced a set of annual financial statements. And it must be presented at the annual meeting of members, where a decision will be made at that AGM to declare dividend or not. So that is the process. And the company must do a liquidity test and a solvency test to see whether they can afford to distribute that dividend. Because if they don't distribute a dividend, they can use the dividend in-house to invest in the company's infrastructure. So that's how dividends are declared. So are you going to tell me that SARS is so stupid? If I tell SARS I got dividend on a monthly basis, that means there must be a set of statements coming out every month? It doesn't happen that way. So the idea is that you cannot receive dividend on a monthly basis. it must come at the end of an annual general meeting of a company, and they must be minuted that dividends were recorded, and there will be a production of an annual financial statement. That's how you get dividend. Everything else that you get is not dividend, it's salary. But you can be an employee of a company and also be a shareholder. Then you are earning two different streams of income. You were earning an income as an employee, all right? And that you pay PAY on a monthly basis. And you pay your tax normal as an employee. But there's a separate stream of income that you can earn as a dividend because you're also a shareholder. That can only be announced once an AGM of the company has taken place and after the production of an annual financial statement. So that will be two separate income. They'll have different source codes. Are you okay with that, Mr. Chris?
Yeah, it sounds like we need to have a separate webinar for each of these topics. And I'm sure we can actually delve much deeper into it. So, but I think those are very important pointers. Us as generalists, business advisors and consultants that are the first point of call for many of our clients need also, of course, to know when to refer to the experts to go into deeper. But that's kind of, I think, frames it nicely for us to understand at least what the considerations are and what the next steps should be. So I wonder if we shall jump into this last dividends versus salary. What is the next? We've got another topic which is around the recording of salaries against loan accounts. That's another area that comes up a lot of times. And then we can, and thank you very much for addressing the questions in the Q&A. So if you were wondering what's happening with questions, they are actually being answered in text format in the Q&A. If you click the Q&A button, if you haven't, you'll be able to see the questions and the answers to them there. But Mohammed, if we can cover this thing about loan accounts and how salary compared to loan accounts and how business owners that are having loan accounts in their businesses and earning salaries at the same time should consider dealing with it.
When you have a debit loan account, it means that the individual owes the company money. Am I correct in saying that? That's a debit loan account. Am I correct?
Yeah.
So now the company, the individual owes the company, right? So you have a debit loan account. Now they can minimize that by paying the person a salary. You are reducing the debit loan account. Am I correct?
Yeah.
But you still got to pay your PAY on it. So you understand what I'm saying? Is that it's like a book account. You're reducing a debit loan account, but the nature of the payment is still a salary. So although you're making it like a debit against, you're reducing the loan account. You're doing an electronic. You're doing a book transaction. You may not physically give the money to the person, but the nature of the payment is a salary. So you have to pay PAY on it. So you will have a less debit loan account balance. So at the end of the financial year,
so what we're referring to is a person earning a salary, but then reinvesting that salary into the business.
Yeah, but you got a salary. You haven't changed the character of the payment.
You have to pay tax on.
You have to pay your PAY, right? So then you can have a situation where, although you reduce the debit loan by the amount of the salary, at the end of the financial year, there'll still be a debit loan balance. That means you're still owing the company. Here you are. You're still owing the company. You still got to pay a deemed dividend tax on that amount. Because although you haven't physically received that payment is a salary. So let's go back to the previous slide, if you don't mind. Let's go back to the previous slide. Then you're going to further reduce the debit account by receiving a dividend. Can you see that? All right.
Yeah. So shall we look at those two examples, because I think that illustrate what you are saying.
So now here you're getting a dividend, it's another source of payment. So although you haven't physically received it, you're reducing your loan account. So you've got to pay tax on that dividend because the character of payment hasn't changed. The character of payment is like salary or dividend, but you're reducing a debit loan account. So you have to pay tax by looking at the individual characteristic. And then if you go on to the other slide, so you're going to pay, whenever there's a debit loan, there's a deemed dividend implication. All right. Plus you must pay your PAY. You go on to the next slide, the second example. Now we're saying the other way around. The previous slide. Here's a debit loan, 1.5, but you've got a salary of 1.8. Can you see that?
No.
You're going to pay PAY on the 1.8. But in this case, the salary exceeds the debit loan. So now there's a credit loan. So there's no deemed dividend at that point, because deemed dividend is only applicable when there's a debit loan. Now you've gone into credit loan. So there won't be any more deemed dividend under this situation. But PAY is PAY.
So the main point here, Mohammed, is that keep in mind that transactions may have tax implications, and that even if you don't do a cash transaction, there may be pay as you earn or dividends tax to be paid, which is very important. So don't get caught with your pants down thinking you have squared things out, but in fact there's still some tax due. Thank you very much for that. I know we've got quite a few questions in the Q&A. So just by the way, there's ways of connecting with SAIPA and with Mohammed through those channels, if you wish to do so. And we can keep that up for a moment. I'll also close the poll. We've been having it open the whole of Mohammed's presentation. And it's interesting that most people say for most of these things that we know a bit about it, we know the important parts. In fact, for all but the skills development levies and so on, we are voting that we know most of the important parts, and then the rest of us are kind of evenly spread around amongst our knowledge of these things. So it's not the first time that we hear about these things, but we learn about the detail, and of course the detail is changing slightly every time there's a new budget speech coming from the Minister of Finance too. So shall we jump into some of these questions straight away? And thank you very much for doing the effort of the text answers that has already been provided there. I'm not sure, Kantha, if you've had a look at those questions. Is there one that you specifically would like to tackle?
Are you referring to me or to Kantha?
To Kantha.
Thanks, I've just unmuted. I've tried to answer them to the best of my ability. There was one question that was being asked regarding size of business, and I'm trying to find it now.
Relating to which tax specifically, or is it in general?
No, I was asking here, it came from Jean. I'm asking, shifting from SMME to a big company, what are the main criteria required in terms of annual turnover, capital, staff, and size? And I needed to know what exactly is the person asking, because you know, you get SMMEs at 20 million rand turnover from a tax perspective. So I wasn't sure what.
Let's make an assumption there that the business is growing and it has previously been operating under the tax provision for small business corporations, and now they're going out of that bracket. What are the implications for that?
So you have previously been paying tax at the SBC rates. You within the 20 million turnover, you on a sliding scale. This next tax year, in the 2021 year, you move beyond that. You're now doing turnover of 25-30 million. You get taxed at the flat rate of 28% for income tax. There's no other criteria in terms of staff and size, etc. It's your turnover in this case that actually determines what amount of tax you will pay.
Yeah. Right. So those rules are quite clear and firm. It's a matter of familiarizing yourself with how it applies to your specific situation and then applying that.
And additionally, if you say you were an SBC 2 years ago, the criteria of not belonging to another entity, etc., were met. I covered that in my slides. If you change, so you were a sole member of a CC, you set up a new PTY Limited, you've got membership of the CC and shareholding on the PTY side, both are operating. They're not dormant entities or anything like that. Both, you will lose your SPC. So you can be well below the 20 million, but you've now broken the rule in terms of having ownership of 2 entities.
Yeah.
And so then you lose your small business corporation sliding scale tax, income tax rates, and you then get taxed at 28% on both those entities.
Yeah. There was another question around knowing if you have more than one shareholder, the others that maybe not so active in the business are not taking up shares somewhere else. But I suppose that is the obligation of the business, and the shareholders needs to be made aware that if you are operating as a SPC, that they need to inform you and the implications of that for the business.
Yeah, and it's something you would ask your advisors. So the advisors that are sitting on this chat, it's something that would be posed to you, and they would say, we're now increasing operations, or we're wanting to bring in more investment, we're bringing in more shareholders / directors. What are the implications for us? So you need to recognize that that's happening at that stage, and just say to them, look, I think you're going into uncharted territory. You're going to mess up your tax planning, or your simple tax is going to become complicated. I suggest we start talking to a professional.
Good, thank you for that tip. I'm just aware of the time, and some people may want to run off somewhere else because we've kind of booked an hour, but maybe we have a chance for 1 or 2 more questions. So most of them are answered through the text chat, by the way, but Mohammed, if there's one that you would like to actually express on air for us, we would be able to do that. Or do you want to take Max's one there at the top that's about the business owner? Actually, the business owner invested the money in the business and is now taking it out rather from a loan account rather than as a salary. So it's the opposite as what you've explained in your example before.
Well, if you give a loan, what is the loan? If you're giving a loan to your own company, and what is the loan? A loan is something that you're going to receive back. You're giving somebody a loan, you expect a repayment in the form of capital and interest. So if you are saying, I've put this money to the company, now I'm taking it back, but it's the loan that I gave to the company, then obviously it's not salary. But now if you're earning a salary in the same business that you own, then it's a different matter. So if you own this business and you're sole proprietor, then it comes under your normal ITR 12 as a sole proprietor, and you're paying your tax as an individual. But if you put money in a business, you give the business a loan, and you're taking it back. So there's no tax implication, because I put a loan, I'm getting it back.
Yep.
What is a loan? A loan is something.
So there's no pay-as-you-earn payable on that transaction, luckily.
No, it's just repayment of loan, which is capital in and capital out.
Yeah, so I hope that sorts out that concern, Max. But yeah, maybe we weren't so clear when we explained it the first time. We should have covered that one. So can I ask if there's a last comment from each of you, Mohammed and Kantha? So maybe we can start with you, Mohammed. Just a thought that you would like to share with the 90 or so people that are listening in or participating through the questions that I've asked today. I hope we've covered all the questions, by the way, that we haven't answered live in the text chat. If there is any, let us know that we can address those in the future. But just a last comment from each of you on maybe an advice or tip that you would like to give business advisors and business support practitioners in the way that they deal with these kind of tax-related issues when they are supporting their clients. So Mohammed, if you can start with you.
There was a question here I thought I would like to answer, but now suddenly I cannot find that question yet. So,
so Kantha, would you like to go first while Mohammed is looking for that question?
Yeah, thank you for that.
Sure. Sure. So I just want to assure advisors that are on the chat, as well as business owners, that you just need to ensure you're compliant. I mean, you can't run away from compliance. It's becoming more rigorous. SARS is becoming more rigorous in testing compliance and coming back to you to ensure that it's 100% done. So make sure you're registered for what you should be registered for. Make sure that you are up to date with your payments, and that only comes, or payments and submissions only comes from having a well-run accounting, bookkeeping, administrative system in place. Make sure you use a registered person, somebody that you can claw back at in terms of belonging to a professional body, and I'm sure most members on here are, IBASA, etc. And then, like I had a discussion with you earlier when we were setting this up, I'll do a one-pager summary, which I'll send through to you of things we've covered, just points to note and where you find the information. But I want to end by saying there are lots of small businesses who are on here. And just this morning, just before we started this whole webinar, I want to just alert small businesses to the small business debt relief fund that's coming, that's on the horizon and will come through on the 24th of March. And for people to just note that they can go to the website www.smesa.gov.za and register. Because of what we're sitting in terms of COVID, there will be some debt relief offered by the small business department. And I think the minister has been quite clear on how this needs to be done. So as advisors, there's some relief there. There's some relief coming out of the UIF side of things, where if people are gone on quarantine or on self-isolation and they're needing to actually exercise their rights from a sick leave perspective. I just want to end on that. But I will provide that information on a summary sheet, and we can then send it through to all the people who have attended today.
Yeah, I missed that web address that you mentioned. Maybe if you can type it into the text chat for us.
I'll put it into, must I put it into the Q&A or into the?
No, in the text chat. If you could put it in the text chat, please.
I'll do it right now.
Quickly. You would have noticed that I've also pasted another link in there to give webinar feedback, so that we can use for planning of future webinars. So everyone on the call today, on the webinar today, can click that link in the webinar-feedback.the-epi.org and just give us feedback on how you find this webinar. It's very quick. It's just a minute, tick boxes. And if there are any topics that you would like us to cover in the future, you can also note it there so we can include it in our planning. But let's then end off this topic around tax with the right expert in the room. Mohammed, so you've got the microphone to either cover some more questions or to give your last word.
Well, there was a question there about whether we're adding or minusing the salary against the debit loan. I just want to say, look carefully on the slide 10 and 11. In the beginning, you have in slide 10, the salary was less than a debit loan. So you got
on the two examples that
you still have a debit loan, and then it will be deemed dividend. On the next slide is the other way around. That means the salary that you receive far exceeds the debit loan. So I hope that answers the question whether we're adding or subtracting the salary from the debit loan. I've covered both situations. But generally, look, I understand, to be a small business, it's a very difficult life. In the beginning, if you're starting anew, because you've got to develop client base, you've got to network, and all of this takes a lot of time and require a lot of other skills besides financial skills, social skills, building networks, and things like that. It's a tough road. But I mean, life is always a tough road. But with small SMEs, with small businesses, the key is to develop a good network of clients. You have to have a good reputation for the service that you want to deliver. So if you have one good client and you service them well, that alone is going to promote you and market you, because that client will speak favorably of you to other people that they meet. So your own private network is your real asset in developing small businesses. So my emphasis is develop good networks.
Coming from a tax expert, that's an accountant at the accounting professional body, that's a really kind of powerful point to make.
I spoke to you about soccer as well.
You guys to count the beans better rather than go build your networks. So thank you very much for reminding us about that part of our business to make it sustainable. And Kantha, specifically, thank you for the note on the stress. This is something that's, in fact, I had a coaching conversation at 9 o'clock this morning with one of my clients, and this came up there. Sort of the ability of not being able to pay people that have that business as an income stream is laying very solidly in their path now, because the operations are basically going to come to a standstill for quite a while, month perhaps, and the people may actually go hungry, So the thing about the stress is really coming up to hit us hard in many ways. So,
and I think just Christoph, as a closing remark, it's incumbent on each one of us in our personal capacities as South Africans to help each other. This is, I mean, I think we've just hit 200 cases today, and I think we're going to see the worst of it come through on next week and the week after. And just from a business perspective, it's about making sure that your domestics, your blue-collar workers, etc., are taken care of, and what you can actually do to help the situation, because we want to encourage people to flatten the curve, not have contact, etc. And we can only do that as business owners if we're being responsible and being patriotic about what we want to achieve. And the relief sits there. Somebody's just asked a question. I've given you the website that sits in the chat, and that will open on the 24th, and it's registration on that website because the Small Business Minister wants to collect that information. But it is forms that will have to be filled out. Again, it's administrative, but it will talk to how this entire pandemic has affected your business. And I'm sure there'll be many more measures to come from the government. The repo cut was an example yesterday. Not the best thing for the economy, but I think it will help in terms of where we are at the moment in the world.
Yeah, and speaking of that, so I know that Derek, the marketing chair of IBASA, that was going to speak right now, has had a scared his office around the case, and he's been trying to deal with that this morning. So I see that he's actually left us now too, so he won't be speaking. But it is real, sort of. So please be safe, everyone, and follow those instructions that we've received. But yeah, advise your clients accordingly too. So sorry, Lesego, to introduce you on that kind of note. But let's move over to IBASA and IBASA news and updates. So let me thank you, Mahomed, again for your expert advice there, and Kantha for your framing of the context. I think that's very important for us to remember that these things all fit together in some way or the other. I hope that we've addressed most of the questions. There may be new ones that came up. So if you were late to log your question, it may not have been answered, but we can keep that open. So if you guys don't mind, Kantha and Mahomed, just check if there's maybe another comment that you can make on the text chat there while we move over to you.
Sure.
It's fine. There's no more questions for me. I can knock off. Actually, my bosses are calling me on the back.
But thank you very much for inviting me. Thank you. So So great, Lesego, welcome. It looks like we're pressing the unmute button simultaneously. So let's hope that help works now. Now we can hear you.
Definitely. I'm excited. What a wonderful webinar. Thank you so much to our expert panelists. This is clearly a hot topic, not only because it's a season whereby a lot of businesses are feeling the squeeze, but it was also to show that in a bad situation, there's always an upside. I think from IBASA's perspective, we are very clear. We are in it for businesses in general, but most importantly, we want to make sure that the sector is able to make it out of even this fear that we have over COVID-19. As IBASA, we've already sent out our statement, issuing obviously our concern that business advisors overall should take general care of themselves, take the necessary precautions in terms of your hygiene. Do make sure that you don't lose clients in this season. Offer alternatives, whether you use an online platform like this wonderful platform that we have on Zoom, or alternative platforms. See what is out there. And that's the beauty of technology. It does give us ways to work around. I always say, worst comes to worst, use WhatsApp or use a telephone. It is possible to continue business as well in these trying times. But if there are anything that you would like IBASA to be aware of as a member, please feel free to contact us on our email. We will be taking precautions as well as an institute to ensure the safety of our staff, as well as anybody who's coming into our walk-in facilities. Just a friendly reminder, we did have our CPD submission deadline on the 28th of February 2020, and we will be communicating to members who've not met the deadline. We are very serious about continuous professional development, and we would really love our members to come on board. The facility that we've offered, which is a webinar once a month for free at the comfort of your home, means it is possible for you to be compliant without it being an additional financial burden. So on our side, I believe IBASA has stretched a very good hand in terms of trying to meet members halfway on the burden of keeping up with continuous professional development. On our side, we just ask that you do your part and submit the submission yearly when we ask for it. We also have our regional chairpersons who are available for you to contact if you've got ideas on which networking sessions or any other topics you would like to discuss within your region. As always, we've been active in the space once again, discussing the importance of business advisory services to the greater ecosystem. And we're very excited to say the policy discussion on business advisory services, the policy framework, is still going on. And we are passionate about making sure that business advisors in general become part of the ecosystem in a bigger way, because we all know that united together, we can do more. So from IBASA's side, we're excited to have you join us monthly on this platform. And most importantly, stay safe. Thank you, Chris.
Yeah, thanks, Lesego. Sorry, so with all the things happening, I didn't actually introduce you properly. I'm sorry for that. We just
don't worry about it. Don't you worry.
But for those that have been coming to this webinar will know Lesego well by now as the Senior Manager in the IBASA office. There are a few other staff members too, so we had a glimpse of Ntabi there for one moment, making sure the banner is positioned right. But yeah, let's just, you mentioned membership, so let's just cover that quickly as well. And maybe, Carl, if you can bring up that slide for us on the membership. By the way, if you've noted that a website address that's been posted there, it's only going live in April. So you need to wait for that. Or March, what is the 24th of?
24th of March.
March, yeah. So wait for the 24th of March to be able to go on to log on to that site, but save the address so long because you'll be able to get that out to your clients too. So you just need to increase your screen size, your view size there, Carl. You've got you don't have the display view on. You can see the letters properly. Thank you very much. So Lesego, if someone wants to join IBASA, which I'm sure they would if they didn't know about the value they can get from joining, they know now after this webinar. Well, how should they go about doing that?
Thank you, Chris. We've got a very simple online application that you can simply download, fill in. Very fast, effective. The only time-consuming part is where you'll be submitting information to support the application form. Do drop us an email at admin@ibasa.org.za, and then we'll be able to respond to your membership application form. I would encourage all people who are not registered with a professional body to come on board. There's far greater benefits with you joining IBASA, joining a professional body, than being an agent or a business that runs solo. We are looking forward to growing the voice of business advisors. So do come participate and be part of the voices that do so much more for the entrepreneurial ecosystem that we all find ourselves in. Thank you so much.
Right. Let's say, I think a friend of mine's birthday is today, and we said health on, you know, it gives a new meaning to wish someone wealth, and sorry, not wealth, health, as opposed to two. Well, health is another format of wealth. But on this note of where we are now, Carl, maybe you can switch on your camera too. You've been quiet in the background. Thank you very much for pushing all the right buttons and making sure we're all safe in this webinar. So I see a lot of people are doing classrooms online, taking meetings online, more and more online. So we as people that have been attending webinars and so on are fortunate now we can teach others how to go about in meeting online and making it productive events. So do that, please, you know, sort of use the tools that you have, not to have to travel, stay safe, wash your hands, flatten the curve so that the hospitals can deal with what they need to deal with. I saw a clip of someone speaking from Italy this morning saying every morning they hear that there are 450, 500 people that have passed away the previous 24 hours. They locked down, you know, sort of no one's allowed to go out. One person per family can go to the shop carefully. So So hopefully we can avoid that scenario here in our communities. So stay safe, everyone, and see you next time.
Bye, everybody.